An investor's introduction to commercial property depreciation. You work hard for your money, but every year you have to give a big piece of it away to Uncle Sam. What if you could keep that hard-earned money in your pocket? Did you know that commercial real estate depreciation is just as valuable as cash in your hands, if not more so? If applied correctly, commercial depreciation reduces your taxable income, saving you real dollars. So what is commercial real estate depreciation? Here's the buried treasure in commercial real estate investments. Commercial real estate depreciation is a significant tax break given to qualified commercial real estate owners and investors, which reduces their taxable income. The Internal Revenue Service, IRS, understands that buildings and equipment deteriorate and become less useful and less valuable over time. To account for this decline in value over time, the IRS allows qualifying commercial property owners and investors to reduce their tax bill by reducing the value of their property over a set period of time. How does depreciation benefit me? Savvy investors focus their energy on reducing their tax liability by capitalizing on the tax strategies afforded to us by Uncle Sam through real estate investments. Tangible assets naturally lose their value over time. Depreciation is an accounting process of spreading out the cost of the asset over the course of its useful life. Basically, depreciation represents how much of an asset's value has been used up since the day it was purchased or valued. Let's use your car as an example. You buy a car, the entire car will likely last you at least 10 years if properly maintained. However, certain parts of the car, for example the brakes, tires, and windshield wipers, will have to be replaced before the end of that 10-year lifespan to keep the car in good operating condition. Your real estate asset is the same. So, the useful life of an asset, whether it's a building or a set of brakes, refers to how long something is productive. How does the savvy investor maximize depreciation benefits? In commercial real estate investments, a cost segregation study allows for even greater tax advantages and savings to investors just for buying the property. Using cost segregation, new property owners can accelerate depreciation on certain interior items like water heaters and exterior items like parking lots over corresponding periods of time such as 5, 7, or 15 years instead of decades. Of course, your goal is to always increase your cash flow and profitability. So by accelerating your depreciation, you can lower your taxable income sooner and write off assets much faster than traditional depreciation limits allow for. We'll show you how this works in a little bit. But first, it's important to note that depreciation only applies to buildings and equipment and does not apply to land. In other words, to the IRS, land doesn't deteriorate over time or lose value, so no tax breaks are offered for the value of a property that is associated with its land. Let's look at an example of what depreciation benefits you could receive if you invested in a commercial property. Let's say we invested in a $1 million retail shopping center with a few inline stores in it. For tax purposes, $200,000 of that $1 million is land and cannot be depreciated, but there is still $800,000 of property left for us to depreciate. Normally, commercial buildings depreciate over 39 years, so we would get $800,000 divided by 39 years, or around $20,000 of depreciation benefits each year. That means your taxable income will be reduced by $20,000 each year. But wait, in this example, we did a cost segregation study and determined that $300,000 of the asset value can be depreciated within the first year. Sure, it only leaves $500,000 to be depreciated over the remaining 38 years, which is around $13,000 per year, but you're receiving over 15 times more depreciation in the first year. That means if you own 1/3 of this property, you could receive a personal income tax reduction of $100,000 in the first year. So, at a tax rate of 35%, you get to keep an extra $35,000 of your hard-earned money in your pocket, and you can do whatever you want with it. You can even reinvest that cash into another real estate deal to get more income and earn more depreciation tax breaks. With the power of depreciation, you can continue to defer your tax payments and reinvest those savings. You may be thinking that this seems awfully generous for the IRS to provide these kind of tax breaks. So, what's in it for them? When the property is sold, there will be a reset of the depreciable value. and you will have to pay income tax on any gains you receive. However, $1 in taxes saved and reinvested today can be worth $5, $10, or even $100 a few years down the road because of tax-free compounding interest. But we'll save how to do that for another video. These depreciation benefits sound great, but I don't have the time or experience to find and buy good commercial real estate deals on my own. Not a problem. These depreciation benefits can be given to passive investors who own a portion of the asset. The easiest way to earn depreciation is to passively invest with a professional commercial real estate investment business. Let's recap. Depreciation is as valuable or more valuable than cash. Depreciation provides investors and owners of commercial real estate tax breaks. Buildings and equipment are depreciated but not land. Depreciation is recognized evenly over 39 years or 27.5 years. A cost segregation study may allow owners and investors to significantly increase the amount of depreciation they receive in the first year. Depreciation allows us as owners and investors to keep our money out of Uncle Sam's pockets, so we can keep it in ours and put it to better use. You can continue deferring taxes every year by investing in commercial real estate. Remember, if you need to lower your tax liability, you can get all of these depreciation benefits and the cash flow and investment returns from the comfort of your home by passively investing with a savvy commercial real estate professional. If you'd like to discuss the possibility of investing in commercial real estate with the Chandler Group, please send an email to info@chandlergroupcre.com or contact us through our website at www.chandlergroupcre.com. Be sure to subscribe for more videos from Chandler Group CRE.